Good afternoon, monsters. I want to take a quick look at one of my top 10 picks for 2016. Centene. CNC is the symbol. Centene, here's the stock. This is the annual chart. Something pretty unusual about this today. First of all, yesterday it was selling off with big red candle right here, basically with the entire biotech space. And it's not even a biotech. It's a managed care stock. But it was really weak. Today it's bouncing, and it's bouncing pretty strong. The volume is, it's not as good as, yesterday, but the volume is running above the daily average. And here's the intraday chart. You'll see that, it had a pretty sharp rally in the morning, and it now sort of stabilized. Earlier today, when the S&P was pulling back to the session lows, this thing wasn't giving up. It pulled back a little bit, but kind of like stabilized in the middle of the day. Let me get rid of these. Moving averages so you can see much more better. Right here, so you can see how it has flatlined in going into the afternoon. Now, this afternoon, small traders, they're not significant. They're coming out and they're going after April, and they're buying the 57.5 strike calls and the April 60 strike calls, some going as far as April 62.5. Now, it generally doesn't trade a lot of calls. It generally doesn't trade a lot of options at all. In fact, it's the first time since I made this as my top 10 pick for 2016 it is seeing any sort of option activity. And so when it finally starts to appear on my scanner, the first time since the start of the year, it happens to be all bullish, and they're targeting April multiple strikes. These are not big lots, but there's clearly bullish bias over here. Overall, the stock is trading 5 times daily average call volume. On average day, it trades about 550 contracts. So here, combine them all total, and it's trading about 2,900 contracts today. The implied volatility is also relatively stable to rising. So what's cooking over here? Now, earnings, if I go to the chart, you'll notice earnings are not out until after April expiration. It's going to be sometime at the end of April. And so, but they're buying April calls, and they're looking for further move to the upside. Now, a couple things that might be playing out over here. The first thing is that back in January, the company pre-announced earnings a month before it actually announced the earnings itself, the full release. So the company has a little bit of recent history of actually providing. Right here was in January when they actually pre-announced earnings, which beat estimates on top and bottom, and then later on they actually announced the earnings itself. So maybe this time they will do it again in the month of April. Before April expiration, they will actually provide an earnings update, or just pre-announce what it's going to look like, how Q1 is shaping up. So it could be that, or it could be something that I discussed in the chat room yesterday. So here are my notes. And yesterday it was Rob that was asking me if I had any views on what the company, why the stock was selling off. And here's something I said in the chat room. Note 2017 Medicare Advantage final rates will be set for the industry on April 4th. So perhaps it's not the earnings pre-announcement, it's this, April 4th, when 2017 Medicare Advantage rates will be set. That's the catalyst that traders are positioning for. Also, this is probably even bigger catalyst right here. Secondly, I keep reading from my hedgies that the CNC HealthNet mega merger is going to get finally approved, and the regulatory approval that they're all waiting for is finally going to come through any day. I don't know. No, I've read at least 5-6 different types of notes. I don't know when it's going to come. We just know it's going to be at any day. Maybe it's going to be over the weekend. Maybe it's going to be sometime in the next couple of weeks. So there's a multiple catalysts that could be in play. First, it could be an earnings pre-announcement. Second, as I discussed over here, it could be the Medicare Advantage final rates, which we know is on April 4th, or it could be final regulatory approval for the merger with HealthNet. How big is this merger? How big of a thing this is for the company? To give you some color on this, let's go back quickly to what I discussed as in my top 10 picks. So here's the top 10 picks. By the way, for those that are newcomers to Open Order Pro, if you go to Open Order Pro, go here and pull down to January 2016, scroll all the way down, you'll see here's my top 10 picks for 2016. Here's the file, open it up, and just do a quick search on CNC right here, and you'll see here I explain my entire logic of why I like this company, and here you will see me discussing the merger with HealthNet. And basically I explain in detail how big this merger is and how it's going to make the company CNC as the largest, as one of the biggest share of Medicare members. How big is that? The combined company basically will see $4.50 to $5 EPS power for 2017. I know it's a year out, but you have to keep in mind that in another 3-4 months from now, we're going to be already in the second half of 2016, and the market is always forward looking. So they're not going to be basing the value of the stock based on what it's going to make this year. It's going to be already be being based on the next year. So with $5 earning power, the forward PE ratio is 13.6 versus 5-year average of 17. That was when the stock was trading right here at the beginning of the year around 66. Down here at 58, that forward multiple had actually come down even further. Now it's more like 11.5 times forward earnings versus the 5-year average of 17 times earnings. Also, to give you further color on this, the 5-year EPS projection I have for 2017 may still be a bit too low, because if the Medicare Advantage rates that are going to be finalized on April 4th end up being very strong, you could see even small change, positive change in the Medicaid rates on April 4th, and it has a huge impact on the bottom line EPS. This is a very low margin and a high volume business. These guys are going to do about $40 billion in revenues, $40 billion in revenues a year, but they really only carry a margin of 3 to 3.5%. So because the volume is so high, even slight change on the positive side of the rate of the Medicaid rate, and you could see this thing just basically have a huge dropout at the bottom line. So those are the things I'm looking at. Now I'm a little bit perplexed why they're buying April calls instead of going after what should be June, but it seems to me there could be multiple catalysts that they're probably targeting. So what I want to do is, I don't want to put a trade on this today, because what's going to happen is the March expiration will go away after today. Today is March expiration, so it will go away. On Monday, when we come to this stock, they should have May listed. Right now you don't have any May options listed. So once May is listed, on Monday we could come here and perhaps we can buy something like May 62.5 and sell April 62.5 calls. So do like a calendar spread. Or I might just ignore April altogether. I want to look at how those options in May would look like, and then just buy like 60-65 call spread if I can get at least 3-to-1 reward over risk profile of that. So that's why I'm not putting on a trade on this today. I want to come back on Monday when May options are listed, and then I will go after something maybe the 60 or 62.5 strike calls in May, and then maybe create some sort of spread, or maybe not a spread at all, just buy straight calls in May, and we'll take a look at it at that point. Because right now I don't want to pay unnecessarily too much for these June 60 calls, which is currently going for 370, which is about 6% of the underlying. Considering the stock is a low beta stock and hasn't really moved much, basically it's trading within 15% or 12% range, or more, just about that, for about 6 months now. So it's a relatively low beta stock. So that's just a quick note, nothing further to elaborate on this at this point. Just wanted to point out, if you want to see, there is one article, for example, right here from Credit Suisse that actually was issued back in February. But the most important thing, this further highlights the discussion about the merger, the regulatory approval with HealthNet. Right here, the Citigroup said management provided the update on the H&T deal closing. No problems with California Department of Insurance DOI reviewing all documents and has had no additional requests since the last remaining document request. So again, this was back on February 9th. Here Citigroup saying the same thing. RBC Capital, by the way, has the same note that this thing should already be closing by now. There are absolutely no other requests pending out there. So just another, basically some color exactly what I'm thinking over here. We're gonna have the company remains confident in the deal closing, reaffirmed first quarter close. So here you go. That's another line in the same document. So we're going to have the deal closing with HealthNet. We're going to have possibly pre-announcement coming for Q1, just like they did in January. and we're going to have Medicare Advantage rates being set. All these things are coming up in April, and they're buying April calls. Let's come back to this on Monday, and we'll take a deeper look. That's it.